Tokenization is obviously massive. Everyone has been focused on it for so long, but the thing is about tokenization is that it really hasn't hit the big markets just yet, and we're still talking about billions of dollars, guys. We're not even talking about trillions. We're not even talking about hundreds of trillions, and we're not even talking about that beautiful word that begins with a Q, aka quadrillions of dollars. Welcome to the channel, everyone. My name is Nick. For those that are new to the channel, hopefully by the end of this video, you do become a subscriber. If we take a look real quick at what Chainlink has posted, right? This goes back to the 20th. Now, I've included this in recent videos already around Hedera because Hedera is a GC of Chainlink. Also, we know Ripple has some ties back to Chainlink as well. I strongly encourage everyone to join the free Discord. There's going to be a link at the top of the description below. This is one of the most valuable and informative Discords out there, and it's completely free. There's a free side that has a ton of free crypto gems, free market strategies, guides, market trends, free charts, and there's also going to be new cheat sheets dropped in this Discord. And already, we have a ton of testimonials from members of the Discord that have been absolutely loving it. So what are you waiting for? Go and click the link at the top of the description below and join the free Discord. But regardless, this was their RWA tokenization has surpassed DeFi and total assets spreadsheet, basically talking about, DeFi as a $93 billion, market, tokenized RWAs as a $170 billion market. Cryptocurrency, 2.14 trillion, debt markets, 100 trillion, stock market, 106 trillion, global real estate, 380 trillion, gold, 16.1 trillion, insurance, 7 trillion, global trade, 31 trillion, global advertising, 730 billion, gaming, 220 billion, and hundreds of more industries in the hundreds of billions. But then we have derivatives, $1 quadrillion. Now, if you've been around the XRP market for a while, all right, you know that for years, we've been talking about derivatives. And it's because it's the largest market out there. In fact, it's a market that is ripe for disruption. And in fact, DLT and blockchain and tokenization itself could unlock the derivatives market with a ton of liquidity, improving it, efficiencies around trading it, buying and selling, but so much more. Like derivatives themselves needs transparency. Tokenization can offer that. This is why everyone has been focused on derivatives, right? But then more so recently, we have from Chainlink, tokenized financial assets are moving from pilot to at-scale deployment. Now, this is from McKinsey and Company. The report estimates that excluding stablecoins and cryptocurrencies, the tokenized market capitalization across asset classes could reach about $2 trillion by 2030. Now, I personally see this being much larger, much larger, because I've said it in past videos. You see the first billion tokenized. Then it moves to 100 billion. Then you see the first trillion. Once we get to that T word, the game is on. This market will scale so fast once we get that first trillion. Because once we have that, it confirms just how big tokenization actually is. The efficiencies tied to it, everything will be realized in that moment, basically. Now, outside of that, we have here, right? Forecast of 3 potential adoption scenarios, 2030, non-exhaustive. Slower adoption, base scenario, and then accelerated adoption. Accelerated adoption, we would have 3.8 trillion in terms of market capitalization, and this is with permissive regulation. This is with infrastructure and enablers reach institutional grade maturity available at scale. Cold start problem is overcome by industry-wide collaboration, and no major security issues or systemic risk events occur. With the base scenario, we have regional disparities exist, but regulatory clarity is increasing, which we already have it right now. Regulatory clarity is starting to pick up. And then we also have infrastructure reaches adequate maturity, required enablers emerge. Some assets tokenized at scale, catalyzed by larger players, limited security risk or issues or systemic risk events. So again, regardless of, some of these predictions, I've seen 16 trillion I've seen 32 trillion. I've seen 2 trillion. I've seen so many different numbers around tokenization. Nobody knows. Nobody knows. Why? Because once the race begins, it's not slowing down. But like I've said, the big market to focus on here is derivatives. CME Group, starting July 29th. Guys, we are getting close to it. Benefit from transparent pricing on 2 new cryptocurrencies as CME CF Internet Computer Dollar and XRP Dollar. These are 2 assets added. This is the new CME CF reference rates and real-time indices of ICP and XRP. Brad Garlinghouse commented on this and he said, first step towards institutional crypto products is to have a trusted benchmark reference rate. Nice to see CME Group and CF Benchmarks collaborate on this for an XRP index. The market has spoken. Now, this is very interesting. Now, remember what CME Group actually is. If we actually look here, we can see that it is the world's largest operator of financial derivatives exchanges. And also, the company also owns 27% of S&P Dow Jones indices. Very interesting. We have its exchanges are platforms for trading in agricultural products, currencies, energy, interest rates, metals, future contracts, options, stock indexes, and cryptocurrencies futures. So again, this is a very, very large operator around, derivatives exchanges. We could see the revenue, operating income. We can see the net income, total assets, and even total equity here. Again, it's not in the trillions, but it is still one of the largest exchanges out there. And it is focused on the big market, derivatives. Over here, big shout out to XRP Drops for this. The venture arms of CME Group is an early investor in Ripple. The collaboration of CME Group and CF Benchmarks for an XRP index is a logical consequence. And here we have the venture arms of CME Group. Additional investors participating in the round include Contender, InnoVentures, the venture arms of CME Group. And this is where you start to see those connections really kind of coming into play. And this goes back to 2016. Talking almost 10 years ago now. This is why I focus on those old connections, because they do result in some moves later on. These are puzzle pieces that you need to focus on. Now, outside of this, Smoke Dog, why XRP being added to CME Group's derivatives real-time reference rates is very important. The market around derivatives is the end game for value because it is the largest value. Ripple and XRP aim to make the entire value chain more efficient with DLT, and that includes derivatives. In this video by ISDA, Ripple partner, they describe how the derivatives market is on the cusp of a technological revolution while discussing their new CDM model built for blockchain, which I will talk about.
The derivatives market. The derivatives market is safer and more transparent than ever before. But the infrastructure that supports it is complex, disjointed, and costly to maintain. Managing basic processes throughout the life of a trade is manually intensive. Each firm has developed its own way of describing common events, like trade termination, compression, or the exercise of an option. This increases the potential for inconsistencies between firms. Constantly correcting this is a big drain on resources and is not sustainable. Fortunately, new technologies such as distributed ledger and smart contracts offer the potential for greater automation and efficiency, reducing complexity and costs. But effective automation can only be built on standardization. If each technology uses its own set of representations for trade events, then we'll simply recreate the existing disjointed infrastructure. To realize the full potential of these technologies, we need a common representation of trade events. That's where the ISDA common domain model comes in. ISDA's aim is to create a comprehensive standard digital blueprint for how derivatives are traded and managed right across the life cycle of a trade. The ISDA CDN will enhance consistency across firms and platforms, providing a bedrock of standards upon which new technologies can be applied. The derivatives market is on the cusp of a technology revolution. The ISDA CDN will help realize that potential.
And yes, this is needed in order to welcome in those new technologies, just as they are saying here, right? And this is all through the CDM. This is their new, this is their basically standard body, if you will. It's their master agreement. And we actually have that over here, right? Derivatives body ISDA updates master agreement for tokenized collateral back in January of this year. This happened almost right after Ripple did partner with them, which is pretty crazy to me. Again, timeline is just insane around Ripple and some of the connections, like even the BIS CPMI group, right? The CPMI group happened 1 month after XRP got cleared as not a security. Crazy to me. But this is the breakdown of the CDM, right? Which is this master agreement. The ISDA has updated its master derivatives agreement to include support for tokenized collateral. Big focus here, which is crucial given the vast size of the derivatives market, over 700 trillion in notional value, 1.2 quadrillion the last time that I looked at it. This update allows for the use of DLT-based cash and securities as margin in derivatives agreements, which, by the way, as we do focus on securities, we really kind of look at the DTCC. What are they doing? They're tokenizing securities. They are focused on that, even with SWIFT, as well as Chainlink. Provided that ownership changes on the DLT, distributed ledger, are legally binding. Unlike conventional systems, blockchains enable 24/7 token transfers, but ISDA specifies transactions must occur on local business days when both the blockchain system and commercial banks are operational. ISDA acknowledges potential legal, regulatory, tax, and accounting issues with these new clauses. For years, ISDA has promoted the use of DLT and crypto assets, with initiatives like Common Domain Model for standardized derivatives data, and examine the legal enforceability of DLT-based derivatives and Basel rules for banks using crypto assets. And there you have it, right? DLT-based derivatives. This is a focus of mine because this is the largest market out there. We know that Ripple has deep connections back to ISDA through, for an example, Raul Advani, who is the policy director APAC. And this is 5 white papers that he's actually involved in, 4 of 5 in his time at ISDA. The derivatives market is the end game for value. And this is from XRP Drops. Here you guys have those papers. The white papers, one of them is when he was the policy director APAC at Ripple. He still is. But this is also the head of public policy, Asia Pacific at ISDA. Interim head of public policy, Asia Pacific at ISDA. Director, public policy, again, APAC ISDA, essentially assistant director as well. Again, this is the connections that I focus on. Major players are working at Ripple with connections back to some of these big players like ISDA. Now, also, we have over here the promise of tokenization. This got posted on March 10th, and this is from the FIA.org website. For those that don't know about the FIA, here we have the breakdown of what the FIA is. It's the leading global trade organization for the futures, options, and centrally cleared derivatives markets, with offices in Brussels, London, Singapore, and even Washington, D.C. And this is all around the integrity, how to enhance the integrity of the financial system. And it's very interesting that they're now focused on tokenization as well. It's kind of like everything is lining up around what is really going on. And if we actually look over here, we have the promise of tokenization. Tokenization was introduced in 2017 as an alternative tool to track ownership and automate the transfer of securities, leading to more liquidity, transparency, and accessibility. For derivatives markets specifically, this could pave the way for greater efficiency, particularly in certain post-trade processes, because as we really kind of look at it, there's a ton of problems. Even here, they say, for example, the industry currently relies on a complex web of interconnected systems to move collateral to meet margin calls from clearinghouses. Tokenization could allow cash and securities to be transferred instantaneously on a 24/7 basis, eliminating the risk that can arise over weekends and holidays. Every single major derivatives player out there, FIA, the ISDA, securities players, the DTCC, all of them are focused on one thing: derivatives. How can we make derivatives extremely efficient? And then you see tokenization is the key. Tokenization is the key. And it's just crazy to me that more and more people are not really looking at derivatives and connecting the dots back to some of these, players like Ripple, for an example. And I know that, around XRP and the XRP community, there's a lot of people that talk about derivatives. It's been a thing for the longest time. But some of these connections, it's just insane to me. And then also over here, we have why the smartest businesses will soon be using tokenized assets. Now, this is from Financial Times. This is also with Ripple. It's a partner content. And here we have RWA tokenization is a major trend in fintech, transforming tangible assets into digital ones on blockchain ledgers. This shift, noted for its significant impact, saw the tokenized gold market exceed $1 billion in 2023, with predictions of a $16 trillion industry by 2030. Tokenization itself offers several benefits, such as 24/7 trading without traditional brokers, enhanced liquidity for illiquid assets, and reduced transaction cost. It also provides transparency, immutability, and programmability, leading to automated functionalities like dividend payments. Industries from finance to real estate are adopting tokenization, with large banks and companies like JP Morgan and the state of California leading the way. A 2023 survey revealed that 72% of global finance professionals plan to explore tokenization by 2026. Moreover, the adoption of CBDCs by 90% of the world's nations signals a significant shift towards digital asset tokenization. Overall, tokenization is poised to revolutionize various sectors, offering improved liquidity, reduced cost, and greater market accessibility. And this is where we see tokenization of everything being a focus. Obviously, as we look at derivatives, being a $1 quadrillion plus market, it's going to take some time for this to actually be tokenized. It's probably going to take some time to even reach derivatives. I do foresee all of these other markets, all of these other industries really kind of being tokenized first. But this is still a focus of mine because this is where all of the money really will be on chain at that point, because this is probably going to be the last market. Maybe it's actually going to be the first market, because if you think about it, all of these other markets, all of these other industries, they are working just fine, technically, even with all the inefficiencies, not in the best way, right? But derivatives themselves, this is a very complex market. And it's one that really, once you see tokenization of derivatives, it is going to be a night and day difference. And one player that really kind of stands out here from all of the connections with all the big players that came from the ISD as well, Ripple really is that one. That's why this really is the end game market, because once this does get tokenized, it is pretty much game over. This is where everything will be on chain. You'll see trillions transacted 24/7, 365. I mean, this is where everything really kind of starts to get very exciting. I think at that point, I don't think that we'll be really looking at charts at that point, because utility will be realized in, utility value will be realized in, and I feel like it will be almost up only for a lot of these utility projects because of the transactional flow, the volume, the value that will be moved over the network. So we'll definitely have to watch, wait, and see, but this is the end game from my point of view because of just how much money is tied to it. So with that being said, I hope you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, to notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.